that is an epically big shock to the global economy as well as the domestic economy. And I do not think that, a small recession is all we're going to get here. I think that this is going to be a tidal wave, and then the economy was ripped out of it because the Fed started quantitative easing, right? So that's one of the keys, is to keep in mind that every recession we've had now for decades almost, the Fed has printed us out because inflation has been low since the 80s. Well, the question then is how long could this recession be if the Fed isn't able to print us out? And I would argue that you could be in a 5 to 10 year kind of recessionary environment where you don't see new all-time highs in the stock market. I fully expect Amazon to maybe trade. I know this sounds crazy, but I wouldn't be shocked to see Amazon in 2023 or 2024 down to $50 a share.
Back in January 2022, Soloway projected that the cryptocurrency sector might experience a dot-com moment soon, but also predicted that Bitcoin could trade at around $100,000 or $250,000 in the next 5 years. In a recent interview, chief market strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts, as well as his predictions and price targets for Bitcoin and gold. He is also a proponent of crypto regulation, believing that it would be a positive thing for Bitcoin and cryptocurrencies in general, as institutions would feel more confident investing their clients' money in them. Before listening to him, please ensure to smash the like button and subscribe to the channel.
We're so used to Bitcoin going down when the stock market goes down. And during a recession, if things are going to get worse, like I think, then the stock market is going to continue to go down because earnings are going to suffer. So in terms of valuation, stocks need to adjust down. What I'm thinking is that once we get transparency and regulation in the crypto space, you're likely going to see this pivot where Bitcoin becomes much more gold-like. And what we know about gold is that when there's uncertainty in the economy, when things get scary, people love to go to gold as a safe haven. So I'm guessing that Bitcoin will have that pivot in 2023, where it actually starts to do better. Even when the stock market drops, you might see buyers, institutional buyers, going to the safe haven of Bitcoin. Man, we still have a long way to go to get there because you need regulation, you need transparency, you need trust. But I do think that will probably happen in 2023.
And what does that mean for the broader economy?
Yeah, so the broader economy, I think, is in a lot of trouble. I mean, if you look at the Fed funds rate, which basically less than a year ago was at 0.25%, quarter basis point, and then we've gone to 4% in such a short time frame. That is an epically big shock to the global economy as well as the domestic economy. And I do not think that a small recession is all we're going to get here. I think that this is going to be a tidal wave. I still think you have people spending on credit cards that they paid down during COVID. They saved money, all these things. They wanted to go out and travel, so it was very stimulative. So we've kind of stayed out of that recession-ish type thing. But I think that you're going to hit a wall very soon, and you're going to see this very nasty recession come in. And the problem is the Fed cannot print money now, right? Inflation's 7% right now, 7.5, whatever it is. I think 7.7 was the last CPI reading. I mean, even at 5%, the Fed still can't print us out of a recession because it would then shoot inflation much, much higher. So you have this really tricky scenario where I think we could be mired in a recession that lasts for years. First of all, the Fed has been involved in every bubble that's been created, whether it was the dot-com bubble, whether it was the financial crisis where real estate just got crazy, and then you had all these derivatives, and then all that blew up. And then basically what we saw in 2008, 2009 was it was only about a year and a half to 2 year recession. And then the economy was ripped out of it because the Fed started quantitative easing, right? So that's one of the keys, is to keep in mind that every recession we've had now for decades almost, the Fed has printed us out because inflation has been low since the 80s. Well, the question then is how long could this recession be if the Fed isn't able to print us out? And I would argue that you could be in a 5 to 10 year kind of recessionary environment where you don't see new all-time highs in the stock market for 10 years. What is it going to look like for the average person? I mean, unemployment's going to go up probably north of 10%. Again, comparatively, that's a major move up in unemployment. I think you're going to see a lot of companies that have been able to borrow money to stay afloat, because again, borrowing costs were so little that they could just borrow another $1 million, $5 million, $10 million to keep the businesses running. They're not going to be able to do that. So you're going to see a lot of bankruptcies going in. There's going to be a lot of stress in the system, corporate debt, a lot of issues there. So I think there's a chain reaction that's going to get set off. And then the question is, how bad does it get before the Fed does come to the rescue? Because like, if you think about it, if let's say inflation's at 4% and unemployment's at 4%, well, the Fed's not going to print money. But what if you had inflation at 4%, but unemployment at 20%? You can't tell me the Fed's going to sit by and not print us out if it got that high. So it's all about the severity of it, which is then going to cause the Fed to eventually come to the rescue, which I think they'll be forced to do. And it just brings me right back to, well, what's the safe investment here? Well, probably gold, metals, and ultimately, eventually Bitcoin. Eventually, Bitcoin would be a safe haven as a commodity. So for instance, there were people buying Bitcoin at 65,000. That wasn't a good opportunity. We obviously see that. Bear markets create the best opportunities. You now have Bitcoin trading at 16,000. I think it might even be in the high 15s by now. So I think you're looking at those type of things you want to be involved in. For me, for instance, I'm a big gold bug, as I said. I also am a big fan of foreign markets right now. I think Brazil is an interesting stock market. It's been consolidating for a long period of time. I think that could be a breakout. And I actually think that now that President Xi in China has been reelected, it does look like he might be starting to soften his hard line a little bit, which then could make the Chinese stocks very, very attractive. Now, there's obviously risks in investing in foreign markets for sure, but to me, it's proper allocation, right? Take a little bit of money there, a little bit of money there, and then have a well-diversified portfolio. For me, I'm now mostly avoiding US stocks unless it's for a quicker swing trade. You have to look at, well, what does Apple have to do? What does Microsoft have to do? So again, you were talking about audits, regular audits. We need to know, what are the rules going to be for, because I think in my opinion, Gary Gensler will make a distinction. He's going to say they're securities, but they're not the normal security, right? You don't have the same structure as Apple. So the question is, what kind of reporting will they need to do? But I would say quarterly reporting is what's going to happen for anything that's a security in the crypto space. And that will take money, right? There's going to be a cost associated to these cryptocurrencies for that. But the way I look at it also, it's going to keep certain projects that maybe shouldn't be public. Like if you look at the space, the crypto space, there are 20,000 cryptocurrencies. There's no reason to have 20,000. Most of them are junk. So it's going to help cleanse the system of a lot of the junk if you raise that bar for entrance a little bit. I want to make money, right? And that's my goal, right? I'm not going to hide that. It's all about, for me, if I'm going to buy Bitcoin here in 5 years, I want Bitcoin at 100K, whatever it may be, and I'm going to make a lot of money that way. So if we get in regulation that makes it less decentralized, but it gets me to 100K on Bitcoin in 5 years or less, I'm probably okay with that. What I wouldn't be okay with is regulation that actually causes a hurt to the prices of these crypto assets.
Now, you've mentioned gold and foreign markets and Xi even in particularly. Let's start with gold. Can you walk us through 2022 in gold and silver, if you will, and then let's ask, now that we are moving into a recession and both these metals did quite well during the last recession, what might we expect in 23, 24, 25, etc.?
Yeah, so I think 2022 was the year of the dollar, the US dollar. The US dollar spiked dramatically. It basically even pushed gold down. Even though gold's a safety asset, gold did end lower, or at least has been lower for the year. But what I love seeing here is this potential breakout where you had this like W bottom, you broke out, now you're retracing, this is now support, and my guess is you're going to start to head higher. So I would guess that gold in 2023 retests the 2,000 and change high and potentially breaks out. I think the dollar has likely made a near-term high, maybe even a longer-term high, as the Fed kind of gets to the backstop and stops hiking rates. And I think that gold, again, is going to be probably the best performing. It was the best performing asset in 2022 when you compare it to the S&P and Bitcoin. And I likely think that it very likely will be that best performing asset again in 2023. Silver also had an awesome move, right? So recently, and I'm talking recently, but look at this. Here's a trend line. To there, you broke out, and now you've retraced to support. You actually should start to see a move up on silver back to about 25 per ounce on silver here. So I'm bullish on both those metals. I think that, again, the key is what hurt basically the metals in 2022 was the dollar. The dollar was just nonstop up. And because metals are traded in dollars, that obviously took a lot out of them.
Why was that? Why was 2022 the year of the dollar?
Oh, I mean, just because you had this Fed that was on a warpath. I mean, if you think about it, 475 basis point hikes in a row. I mean, I don't even know. I mean, I guess you'd have to go back to the 80s for that kind of stuff, but it was unprecedented price action that we haven't seen in 40 years here in terms of hiking rates, which, remember, when you raise rates, it pulls money out of the system. And so essentially you're restricting the amount of dollars, therefore less supply of dollars means the dollar price has to go up to meet the demand. And that's what we had. So it was, I mean, everything this year was about the Fed and trying to push that dollar up, and they succeeded, and it probably did bring down inflation, at least somewhat. The question is, how low does inflation get? So what businesses do, what they'll do is they'll raise by 10%, which the consumer can handle, and then next year they'll raise another 10%, maybe another 10%, and they'll raise those costs over a period of time. And so because of wages going up, it's going to take a little bit of time to bring that ultimate, kind of inflationary thing back to 2%. So I would say honestly, I don't expect 2% inflation at least until 2025.
So is it on a downward trajectory now, or do you think it's going to move higher?
No, I think it's on a downward trajectory for sure. Yeah, I do think that we've at least made peak inflation, but I think what you'll see is inflation comes back to like 4%, and then it gets very sticky for a long period of time. And again, because the economy is going to be in recession, the Fed can't raise rates more because obviously it'll make the recession worse, and then it's going to kind of be sticky there for a couple of years.
Sticky.
Yeah.
What does that look like?
Sticky. That just means it's stuck at 4%, and it's not going to be so high that it's going to kill the consumer, right? Because I mean, compared to 9% or 10%, which is what we've seen, it'll seem lower, but it's going to be high enough that the Fed cannot stimulate, which is what everyone. I mean, if unless you're as old as I am, and I'm in my 40s, you don't really remember the pre-Fed stimulus periods, right? I mean, we go back to the 90s. It was, even then you could argue that the Fed was still involved by lowering interest rates and so forth. But quantitative easing started in 2009, and it only ended in late 2021. And a lot of investors have never seen that period without the Fed QE. Do you think that the economy, again, and this is going to be what's going to be so negative for the global and domestic economy, is that I think you will have that inflation number sticking around 4%, give or take, and you're going to see a recession. So anytime you have inflation and a recession, it's almost like two negatives, right? Because people are losing their jobs or they're not making more money, but prices continue to go up at a clip. And again, that is the worst of all scenarios. And so I do think that we will see a period of stagflation. I do think that if the global economy and domestic economy suffers enough and we go into a deep enough recession, then you should likely see a scenario where you have prices start to fall. Because, right, if everyone's losing, I mean, if you have unemployment that goes to 20%, people aren't buying luxury goods, for instance. I mean, it's just not happening in that environment. And even just regular goods that, aside from food, I mean, food and energy are the two that you can't really avoid. Yes, people can trade down to kind of a hamburger, from McDonald's versus a steak type thing. But I do think that you see that prices will start to fall if the recession gets bad enough. For gold, for me, for sure, I love the price action that we just have gone through. You've had a little short-term breakout on gold. We kind of just talked about this before, but here's your trend line, little W bottom. I love how the double bottom held. Twice it tried to break and held. Then you got this bullish move. Now you're consolidating. This is going to be support. I would look at buying $17.25 an ounce on gold and expecting another bull move to the upside. We do get the Fed minutes out this week, so that should be interesting as well. So again, I would look for higher prices in gold into year end and in 2023.
And how about silver?
Yeah, silver, kind of the same thing. I mean, even with silver being an industrial metal, let me just bring up that here. Let's look at silver real quick. Same thing with silver. It had this beautiful bottoming pattern. It broke out of short-term resistance. It's now retraced. I would expect another move up, and I think $25 per ounce on silver is likely where we're going.
What are your thoughts on Tesla?
Yeah, so Tesla, it broke a very key support level and it has been trading lower. Let me show you guys this one. So this support line, you can see how it hit here, here, and here. Then it bounced and then it broke right here. So Tesla, to me, you will have a short-term bounce around 166 to 165, but then it's headed likely down to about 137 before it makes a major support level. So I think, again, right now we're getting close to a short-term bounce in Tesla, but I still think it's got more downside after that to go. I think, again, with Elon Musk buying Twitter, and he's, now he's tweeting like 10 times a day at least, it would concern me. If I was a Tesla shareholder, I'd be concerned that his focus is now getting taken away from Tesla and growing that company. He now has he had a lot before on his plate, rocket ships and Tesla and this and that. Now he's got Twitter to deal with, and he just paid $44 billion for it. So he has incentive to really focus on Twitter and get that working right. So again, I think it takes his focus away, which is never a good thing if you're a Tesla investor.
Are there any car competitors you think might take over the EV market?
Yeah, I don't know about taking over completely, but I think there's no doubt that, Ford has said that they're going to basically have all EVs by 2030. Every car company is moving in that direction. So they will bring their game up to Tesla's level. We've seen that in every scenario with every new kind of technology, is that everyone eventually brings it up to that level. And that does pose a risk for Tesla. I think they have to continue on this autopilot, this self-driving avenue, because they have to keep themselves distinguished from the rest of the car companies. They need to be a leader, not kind of within the pack. Amazon, we know it's fallen precipitously. The chart, again, is down from basically $190 to $92. So you're basically down 50%. The one thing you can see is there's this sideways chop from 2018, 2019. That is where we are currently holding. So right now you are at support, but I do think that as we dip further into a recession in 2023, I would expect Amazon to take a hit, right? If people are feeling the crunch, they're going to be buying less on Amazon and just less overall. The consumer is going to get hurt. So I fully expect Amazon to maybe trade. I know this sounds crazy, but I wouldn't be shocked to see Amazon in 2023 or 2024 down to $50 a share. There's a major support there around gap fill. It wouldn't shock me to see it go down in that range.